Welcome to another stage analysis video. It's Sunday the 16th of November 2025. Lots to get through as always on the weekend video. We're going to start off with some of the stocks from the weekend watch list scans, of which a little bit more difficult this week to get results, but there's still good 20 or so stocks that come up. So starting off with Google here, which has pulled back to its 21-day moving average at the moment and rebounded on Friday. So holding up better than a lot of the market. You can see relative strength versus the S&P 500 has been outperforming since mid part of July, just after it started to pull out into early stage 2 during the middle of June. So it's had a consolidation and pulled back a bit. So second consolidation within the last few months, sitting right at the top, but at the bottom of that current range. So we want to see a rebound back through the plus 180 ATR level to 81.78 currently in the short term here, in order to see a little bit of that trend recover, as we consider the short term uptrend when it's above that level. So we're back in a more neutral position at the moment. If we look at it on a weekly basis, you can see the stage 2 run has been very strong since breaking out in that mid part of June there. You can see with its run, we got a max of 68% over the course of the last 23 weeks. So coming up to 6 months since it started to break out into stage 2 again after a big sideways range throughout the last year before that. So it's obviously a little extended in the near term compared to its group. It's in the upper range of its group, but the group itself has been dropping off. If we go into interactive media and services, you can see it's been pulling back with a double bottom. So it could still spring from there, but it is pulling back towards its rising 30-week moving average there. So in stage 2 minus position at the moment. And technical strength of the group, stocks with technical strength of 6 of 10 or higher, it's dropped below the 30% level over the last few weeks, and the percentage of stocks above their 30-week moving average in the group is dropping down towards the 40% level as well. So it is drifting a bit, the group at the moment. So if we come back into the daily chart here, just drop down to an intraday, you can see the recent range a little bit more clearly here. So it's sitting right at the bottom. That potential spring could be a test on Friday. So if we do see a rebound up through this area, then that would be interesting. But if it starts failing below the low on Friday there around that 270 level, then obviously that would be negative. We start to drop into stage 4 on this lower time frame. Then on the higher time frames, coming back into the chart there, we'd still be in stage 2, but we'd probably drop down into stage 2 minus very quickly at that point if it did get back to there. AMD next up, so similar kind of thing. It's actually held up better. Another rebound around its 21-day moving average, has shown some good relative strength in the near term over the last month compared to what the market's been doing. It did have that OpenAI news. A lot of stocks obviously having news that they've had commitments from OpenAI, etc. So this was one of them. Rebounded strongly. It's been one of the strongest semiconductor moves since the April low. So if we look at the actual percentage move off the low to the high there, moved over 240 odd percent. So still sitting very close to the highs. So looking for a rebound again, start to push back up towards the upper range. If we look at the weekly chart, you can see breaking through old highs as well from the early part of 2024. So it's still in a strong position. Technical attributes still above a 6 at the moment. We're on a SATA 8 of 10. Relative strength significantly outperforming versus the market. Semiconductors group itself just in stage 2 minus here. So just drop into that chart. You can see closing below its 10-week moving average for the first time since moving into stage 2 in middle part of May there. You can see percentage of stocks above their 30-week moving average dropping off, and the technical health of the group starting to wane a little bit there, dropping down towards the 40% level at the moment. Another one of interest at the moment is Microsoft. It could be developing towards a stage 3 pattern here. It's been going sideways for multiple months. Quite there yet. It's right on the borderline. Little spring potential test on Friday. So looking for a rebound move and get back through that 50-day moving average. Then could obviously spring from here, start to move once more. But if we look at it on a wrong one. MSFT. Look at it from a weekly basis. Let's see, we just draw the range across here. So you can see this move started to move up into stage 2. It's been going sideways, just approaching the rising 30-week moving average at the moment. Man's relative strength rebounding around the 0 line, slightly positive and a neutral stage analysis technical attribute score at the moment. So if it does start to push back up through this range, then we'd be onto a stage 2 continuation. But if it does start to close back through this 30-week moving average here, then this could start to turn into stage 3. Stage 4 breakdown level currently around the 464 level, so which will change over time, but at the moment it's a little bit further back down here. So a little bit to drop off to there. See, it would need to drop over 9% to get back to the stage 4 level at the moment. It's in the system software group. So again, software has been waning a bit over the last month, so dropping back off stage 3 position at the moment, just below its 30-week moving average. Microsoft, one of the stronger stocks in the group, even though it's only got a neutral SATA score at the moment. So as I said, looking for a rebound move up through the 50-day moving average and potential continuation. But if the spring fails and starts dropping back through this level, then we could quickly get a test of that 200-day moving average.